Hey everyone, me Kevin here. Paul Tudor Jones, a hedge fund manager, a hedgie, is baiting Reddit investors and retail investors into potentially the next big short. Now, in order to believe in his next big short, you'll have to pick a big side of the inflation trade. But let's take a listen to how he baits us and how he says, hey, maybe you'd consider investing over here. Let's take a listen to this and I'll share some commentary as well. Let's go. Let's listen. Where does he say we should go?
Certainly the impact models that we run would argue that GSEI or BCOM would double or triple. So you've got, if I just look at where asset managers are, 60-40 types, the one thing that they should be invested in, they're not invested in, probably because they're hearing these assurances that inflation's transitory. So you've got this massive short, really, in the commodity complex, a massive short there. So that makes me think that, and I'll look at the balances in a variety of commodities, and they're all so razor thin. They're all so razor thin. And this is just what happens if institutional money would get to where they should be, given the level of real rates. What happens if the Reddit crowd ever gets into commodities? God forbid if the bullies, the financial markets, ever were to take it on, for instance, like retail did back in the 70s.
Explain what you mean by that.
Okay, he doesn't give a very good explanation here, but I'm gonna break it down. So I'm gonna go backwards. He just said, for example, like what retail did in the 70s. He's basically trying to compare to hyperinflation in the 70s. And where does he think that hyperinflation is going to be? In commodities. He thinks that commodities are going to explode. Specifically, GSCI, which is an index on commodities, and BCOM, which is another index on commodities. He suggests that these are so short that they just can't help but explode, especially if the bullies come in, which he refers to as the retail traders and Reddit traders, and then says that these indices could double or triple. Right now, GSCI, for example, is about 12% short as of June 11th, about 3 days ago. Now, this is an interesting carrot that he's dangling because he's hitting at a very sort of sore spot for a lot of us. About 45% of us, based on a Twitter survey that he did, follow me on Twitter at RealMateKevin, about 45% of us believe, that inflation is going to be more than 2.5% a year from now. About 55% of us believe that it will be less than 2.5% a year from now. And Paul Tudor Jones is taking this particular Fed Open Market Committee meeting, which happens Tuesday and Wednesday, followed by Jerome Powell talking at 2:30 on Wednesday Eastern Time. He's taking that and calling it a catalyst point. He wants to see Jerome Powell saying, we're going to taper sooner and we're going to raise rates sooner. But we, as the audience here, we kind of know that the Fed is not going to do that. The Fed is going to stay on their course. And in other parts of his interview, Paul Tudor Jones says, if the Fed is nonchalant about these massive increases in CPI that we've had in the last two meetings, which we know a lot of this has to do with base effects comparing to last year's whole. We know a lot of this has to do with transitory items of inflation, such as airline travel tickets going up 7% or cars going up 7.6%. Whereas, and these are clearly transitory, whereas things that are non-transitory, things like services, things that last when the pricing goes up, maintenance, medical, these things are actually staying low. We realize these are some of the differences when we actually look at the CPI data. We talk about those in the CPI videos we've done, so we won't re-talk about those here. But when we break it apart, we're like, wow, and is it really fair to call this week a massive catalyst point? I don't know. Paul Tudor Jones thinks the answer is yes. And if you believe in what Paul Tudor Jones is saying, then you should probably invest in something that would give you a lot of exposure to something very much like a Michael Burry portfolio. Michael Burry's portfolio is basically something that would short high growth expectations. That would be a lot of cash flow in the future, not a lot of cash flow now. Tesla's the perfect candidate to short for high inflation. You've got treasury bonds. Obviously, if there's high inflation, interest rates will go up. Treasury bonds today will be next to worthless. Then you've got low-priced tech, which is creating a lot of cash flow now. And then you have other companies here, which are a mix of telecommunications, industrials, some recovery. We've got like CVS in here. We've got real estate investment trusts in here. A lot of different options in the portfolio here. These are some things that you might invest in if you're thinking, man, maybe Paul Tudor Jones is right, in addition to maybe that commodities index. So now you have to separate this, and you have to ask yourself, where do I stand? The most important thing, in my opinion, for you to do, beyond, of course, going to the link down below and taking advantage of that 40% off coupon code and joining the amazing programs on building your wealth, whether that's through making YouTube videos or stocks and psychology of money or real estate investing or you name it. Most important thing, in my opinion, for you to do is pick some investment strategy, write it down, and stick with it. You've really got three choices. You've got what I'm doing, which is, I think by September, October, inflation rotates down. When inflation rotates down, we might see a little bit of a short-term panic in some cryptos. That's going to be a perfect buying opportunity for me. Hey, we had a buying opportunity recently as well. I don't know that we're going to break 31K again on crypto, but I'm keeping an eye on exactly that 31 level on Bitcoin. We've triple bounced off of that, so we've been pretty strong, and I'm very bullish on crypto going into 2022. We've got tech and consumer discretionaries, the Teslas, the Etsy's, the Palantirs, the Snowflakes, these companies that I'm very, very heavily invested in, and I believe I can balance those off using actually a Michael Burry stock here with Google. So that's sort of my portfolio, along with investing in innovative companies like Enphase and, of course, the EVs and so on. So you've got this. Mixed in, you've also got some portion of momentum. Momentum is a smaller portion of my portfolio, but it's something that I have fun trading with, so I like that. Then you've got the other option, which is you literally do the opposite of all of that, with the exception of maybe carrying Google over. Do a Michael Burry style inflation portfolio and expect basically high inflation. Or you do something kind of in the middle, where you're like, well, I'm going to have a little mix of everything. Maybe you have index funds. You expose yourself to multiple different assets so you can ride out whatever happens. That way you don't lose big in either of the scenarios, but you lose that potential of winning big in either scenario. So that is where you want to be. The worst thing you want to do is be a floater. That's like, oh, well, tech just went up. I'm going to go invest over there. FOMO. Bad, 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 bad. Oh, well, those recoveries or industrials just went up. I'm going to go invest over there. No, bad, 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 bad. You want to be in something before it goes up. Very important, okay? So pick a strategy, stick with it. Now, what I do think is really brilliant about what Paul Tudor Jones is doing here is he is baiting Reddit traders. He is literally suggesting, hey, Reddit traders, look, there's a massive amount of short interest here. It could double and triple. All you have to do is take advantage of this sector. It's kind of funny. It's kind of a brilliant strategy to see a hedge fund manager basically try to enroll Reddit traders into his strategy. Now, I think Reddit is going to see right through that, but it's kind of an interesting strategy. Anyway, check out the links down below. Thank you so much for watching.